Happy Sunday, because it is. Hope you're having a wonderful Sunday. My goodness, it's the 26th of January, 2025. Holy cow. Well, let's jump right into it. How is the Bitcoin market? Well, and what is up with crypto? You know, coins like Solana, Litecoin, XRP, Doge, DOT, BNB, whatever. What's exactly happening? Well, if you looked at the charts yesterday or even today, you'll see that they've been moving around through the reps very nicely. And if you were watching the Alpha Trading live stream on Saturday, you'll notice that we pretty much told you exactly where these assets were likely to go yesterday and so far today, like to the T, right? And you'll also notice that we pointed out that the assets moved during the week, the traditional week, also to the targets that we pointed out in previous days. The reason we do that is to set for the record, right? When we are telling you what the probabilities are, and then after the fact, when they hit those probabilities, we point it out to make sure there's no mistaking, right? That those probabilities hit, and they hit for a reason, right? And that reason is simply math. There's really no other necessary reason to give, right? It's just a matter of mathematics. That's why we trade with the VEPs, right? If we could trade better by throwing sticks in the wind and predicting where they're going to land, then that's what we would do, right? If we could trade better by eating the entrails of an ox or sacrificing a lamb, then that's what we would do. But we can't. We can trade best by using the highly relevant maths that actually move the markets. And again, how do we know that they are the highly relevant maths that move the markets? Well, because these are the maths. First of all, if you see where the targets constantly get hit, they're constantly getting hit at the targets that we use. So even if they're not the maths that were being used by the high frequency trading bots that actually control the markets, the fact that our targets pretty much always hit, not pretty much, they always hit. It's a matter of time, right? The fact that our targets hit constantly, right, should tell you, well, if they're always hitting their targets, or if the targets are always hitting, if the assets are always hitting those targets, you may as well use it, even if that isn't the maths that are relevant to the market. But guess what? They are the maths that are relevant to the market. How do we know? Okay, if you're a proper professional investor and you work at a so-called smart money firm, or even if you're just a traditional old banker and you're talking to a new client, the client is going to want to know what to invest in and how your bank can help them. And you are going to tell them something along the lines of, the following assets have given you X% return on investment, right? You've heard that phrase before, right? Returns on investment? Great. Returns on investment, returns for short, are what we calculate things on. That's the basis of our calculations. Hi, Cherry. Hello, what's your name? Cressy. Hello, Cressy. Hi. Right? Returns are what matter. And how do you calculate the returns? Well, you need to know the mean of returns, right? That's one of the things that knowing the returns will give you, is you're able to calculate from the returns on investment. That really means you calculate the returns on investment by calculating the percentage gain or loss that an investment has made in a given period of time. Just like you calculate the gains or loss that an asset has made, right? The percentage gains or loss that an asset has made in its time frame as an asset on the market. Well, an investor in that asset looks at from when did they begin investing in it, and until what time period are they looking at, and then measure that percentage gain or loss. And that is their returns on investment, right? the mean of returns, effectively the average of those returns, right? The mean of returns is a very important piece of information. Why? Because the mean allows you to calculate for things like the standard deviation of returns. What is the standard deviation of returns? That is the spread, the delta, right? The normal distribution. If you've ever seen the bell curve, that's the spread of delta, the spread or the delta of the data that is around the mean. Right? That spread of data around the mean is also called variance. It's just another name for volatility. The standard deviation of returns, that normal distribution bell curve you've seen in school, right? That standard deviation of returns is also another name for volatility, right? So volatility is the standard deviation of the returns. The deviation is how much does the data deviate from the mean of returns, that the middle line of the bell, right? You got that little, the bell, right? You've all seen the bell curve in school. In the middle, there's a line, the 50% line, right? How much an asset moves away from the mean in its price, okay, or actually in its returns, the price follows the returns. How much an asset moves away from that mean in its returns tells you how much percentage, right, it is gaining or losing, and also tells you the volatility, right? Because there's a difference between an ask and a bid around that bell, around that cone of distribution, if you will, that bell of distribution, right? The standard deviation or normal distribution model. You speak Russian? Okay, hello, Russian. I don't speak Russian. I have a Russian name, but I don't speak Russian. But yeah, anyway, so why did I call this video Bitcoin related stuff? Well, because it is Bitcoin related, right? We trade using these models of the standard distribution and the Laplace distribution, which is just another shape of the bell, if you will. It looks more like an Eiffel Tower than a bell, right? They're both just distribution models. They both just happen to be extremely accurate. And if you want to know why the title of this video is, Big Bad Bitcoin, baddies break bones buying billions, or whatever it was, it's really because the HFT firms and the firms that have massively powerful bots doing their work, like the big quant shops that work, building these bots for themselves as well as for clients, like HFT firms that do build their own, but also outsource to developers to get additional stuff built for them, right? These guys that run like BlackRock and Citadel, they all have HFT trading desks, right? Don't think for a moment they don't. They do, right? That's what they did. That's their business. They also have long-term investment strategy, and you could say, well, but they manage more assets in their long-term investments than they do in trade. Sure, but they also use, and the way they trade, not invest long-term, but the way they trade is they trade based on this math. They trade based on, optimizing returns on investments by calculating the mean of investments, of the returns, by calculating the standard deviation of returns, by calculating the Laplace distributions, right? The smart ones also use entropy now. They probably don't use the RMLR because we invented that, and I doubt they have that. But maybe they used it. Maybe they have something similar. I don't know. But the RMLR is one that we created, and as far as I know, they're not using it yet. And I say yet because there is a probability they will use it. But we have delivered to our retail trading audience, our small, tiny little community, the same math-based tools, right? The same kind of tools that these HFT firms and quant shops use in their algorithms and in the tools that they have for their managers and trading desk people to look at. Now they have a different interface, right? Their graphics are different. Their screen might be just a sheet full of numbers with, like, different colors and whatever. And they might not see visual indicators on a chart necessarily. Some might not. But that's not relevant. Because it doesn't matter how you look at the information. It matters. I mean, it can to some people, but it matters that you see the information. Okay. If I gave you a spreadsheet of information and I said this, and I could show to you that all the information that you need is on that spreadsheet, and all you had to do was know when to do certain actions based on where certain numbers were on the spreadsheet, then you'd learn how to do that, right? Right. And if I give you lines on a chart that show you very clearly if something is going up, down, or sideways, and what that means, right, and you need to take certain actions based on what that's doing, then you would learn that, right? Right. The fact is, we give you lines and numbers to make sure it's as easy as possible, right? And we give you value of label names and all that stuff, so it's as easy as possible to do. Why? Because we want you to be able to trade better. We want you to have a better way to trade. Having you learn a better way to trade is the whole point of alpha trading, right? So if you actually want to learn this and you don't have a big budget or a budget at all, guess what? You can learn it completely for free. Right? And you can use our free chart and our free tools, our free education, and our free live streams and our free documentation and our free everything to learn and learn and learn and trade once you've learned. Like, first practice trade for not real money and then trade for real money. And you can actually make real money using our free tools. If you are smart and you learn to use the tools correctly and you use them correctly, right? There are plenty of people who've done that through alpha trading, who have come in, learned the free tools, traded, become profitable, and then eventually they decided they wanted to get the professional subscription, and they did that. And there's some, by the way, who trade with the free tools since years, and that's all they want. They don't want more. They keep it simple, and they just keep the free tools, and that's fine. And they're profitable traders. They rarely even say hello or anything. They're there trading. We know they are. They message us in the background and stuff all the time. But they keep quiet in the chat for whatever reason. They're shy or who knows what. But they're profitable with our free tools. And they trade very nicely, very well. And you can do that too. Just come to alphatradinghq.com/discord. Again, tradinghq.com/discord. And start learning for free today. And if you want private tutoring, you can do that too. Myself or Bilbo will be happy to tutor you. Just go to the Shop Alpha channel inside of our Discord, and you can see that we offer a tutoring course there. You get a bunch of sessions with us directly, one-on-one sessions, and you get a full year of the Pro Trader subscription package. Plus, you get to DM us and everything else whenever you need with questions. All right, talk to you guys later. Happy trading.